well, let's get into that story now on what's happening on the Johannesburg Stock Exchange's mining sector. In recent years, local ownership of shares in the sector has increased quite sharply. For example, Lonmin has grown from 5% South African shareholding to, according to Nedbank Capital, over 50%. For more on this, Paul Miller, Mining and Resources Investment Banker at Nedbank Capital, is with us. Before we go into the thrust of your research, does that 51% of Lonmin's shareholding include the stake that's held by Glencore?
Well, it includes all the shares that are on the South African register. And I would anticipate that Glencore's shares are not on the South African register. So those are South African investors buying on the JSE. Remember, it's the change in the index rules and the exchange control rules that has allowed these shares to move from being counted as offshore shares if they're on the offshore register to be counted on the onshore, to be counted as domestic shares if they're on the South African register. And that's why they've been moved.
So there's a massive change then.
It is. South Africans are prepared to pay more for the same share than a foreigner is. And that's a huge change around. I mean, the significance is it's most dramatic for the platinum shares, for Aquarius and Lonmin, where we've seen huge numbers of their shares move from the foreign registers to the South Africans. I think the significance, though, is in the Anglo-American share.
And?
Well, there it's gone from as low as 25% prior to the measurement period, before 2009. And of course, the argument was always that Anglo-American had to be listed offshore to get a better value on its shares. But when times are bad and you've got a large exposure to South African assets and the foreigners apply a bigger discount to South African assets than we do, those shares have all flowed back. And I see now it's probably over 50%. The trend was very strong and it hit 49% at the end of August.
All right. So that we agree. Those are the facts. But the reason why is perhaps somewhere where you and I might have a little disagreement. When Ivan Glasenberg was interviewed by the Financial Times of London, asked why is Glencore coming to list on the JSE, he said, there's lots of money for my share because of exchange control. He was quite straight about it. Do you think, from your analysis, that that's played much of a part?
Well, look, it's whether you call it exchange control or you call it the more palatable version, which is prudential limits on institutional funds. In other words,
explain that.
No, if a pension fund's liabilities are rand-based pensions to South African residents, then it's fair to expect that the majority of that money should be invested in the local economy in the rand currency. So there are many countries that apply prudential limits on pension fund investments. So the exchange controls moved from where there was an absolute ban on investment offshore to where pension funds have to have a prudential limit.
But Paul, come on, that's nonsense. If you have a look at the top shares in the Johannesburg Stock Exchange, a huge amount of their operations are not in South Africa. Richemont, SAB Miller, and so on and so forth. So, I mean, that's a little bit of a fallacious argument.
Sure, but the idea that the shares should be listed, that the pension funds, majority of the pension funds' assets should be listed locally. Of course, then you can skin the apple many ways as to exactly what is a local asset. And at the moment, the definition is if it's listed on the JSE, it's considered a local asset, and if the shares are on the local register.
No, but we're playing games here. Clearly, SAB Miller's South African assets, which now, if you're a prudential, if you're saying the prudential requirements are correct, the South African assets are a fraction of its overall operations. But let's get back to the thrust of this, which is Glencore says it's coming to list on the Johannesburg Stock Exchange because it's got a very ready market here. On the one hand, exchange control stops these companies or the asset managers from investing abroad. On the other hand, do we understand mining better than perhaps people in other parts of the world?
Well, if you look at what Ivan Glasenberg said, he said that there was demand for his share in South Africa, and they've been to see the institutions locally. And certainly in the days prior to the merger of Xstrata and Glencore, the local analysts were covering Xstrata and were publishing on Xstrata in order to provide a comparison for people having to make decisions about investing in BHP or in Anglo. So there's been a lot of pent-up coverage of Xstrata, and of course the South African connection is very clear both in Xstrata and in Glencore. Now that Glencore's listed and merged with Xstrata, there's definite interest in that company in South Africa, and there is also this angle which provides an added advantage to come to South Africa, which is the prudential limit on our institutions.
So if I'm an investor, South African investor with an asset management company, and I like Glencore so much because I've been analysing it, why don't I just buy it in London?
You can, but there's so much else you can also buy in London. So if the shares move to South Africa, it moves into your 75% allocation instead of your 25%.
You've focused on mining, but surely the same principle applies across the board. Why shouldn't Microsoft, who've got a big South African operation, also have a secondary listing on the JSE? Then South African asset managers could also buy shares in Microsoft, and General Motors, and more and more.
Sure. And if you apply and get permission and you can list, you can do that. My interest, of course, is mining companies, and there's the added angle that why have Lonmin's shares moved to South Africa, where South Africa is facing regulatory uncertainty. We've just had Marikana. That shares moved to South Africa because South Africans are prepared to pay more than the people who are selling it.
Because of artificial limitations?
No, we're prepared to pay more because we don't apply the same discount that foreigners do to South Africa. You know, people living in South Africa are not quite as negative about South Africa as those from outside, and it's perfectly understandable why outsiders would take a more negative view. But the net effect of that, and it's a market, and there has to, for every buyer there has to be a seller, but the net effect of that is South Africans are the majority owners of Lonmin, which I think is the significant outcome.
Interesting. Paul Miller, Mining and Resources Investment Banker with Nedbank Capital. Thanks, Paul.